Well, here we are again, the team at Naples Money Managers on Monday, March 23rd, back to talk to you about what's going on out there. So this has been kind of we've enjoyed all of this, all of us, so not the markets, but we've enjoyed getting together and talking about it. Now this is the fourth time that Dennis and I, for sure, and probably John, have been through markets that have gone down at these levels. And the neatest thing is we have almost all the same clients, and we've been able to get them through this every single time. So I hope this brings some comfort to you. And if anyone is listening that is not a client, it should bring great comfort to you. There's a few things that keep us scared, that dread, that uncertainty. It's all causing us stress. You know what happens when we're stressed? We make bad decisions, right? So one of the things they suggest is if you're really, really stressed about it and you think you should pull the trigger on something, wait till after the market closes and then think about it for a while and then call the next day. Sometimes you just need that little extra time. It's sort of like writing a nasty email and then thinking, oh, I won't send that till tomorrow. And then most of the time you don't send it, right?
Sleep on it is always a good idea.
Yeah, sleep on it. That's a great idea.
A little bit of perspective.
So we're going to talk about the control. Most people have two choices. They're either going to have to sell what they have or they're going to hope it goes up. We have more control than that, just like you do because you're working with us. So we're going to start with Marcus, who's going to tell you about some more things that we've done over the week. We were so anxious to get here to talk to you. And then eventually Dennis is going to tell you what we're going to do for the whole year. John is going to tell you what we've done over the past. So it's not going to be in that order, but that's what we're going to do. So Marcus.
Hi, so we're looking for opportunities to deploy some of the money we've saved up as well as to deal with what we currently have. So we're writing 1 month options on some of our existing stock to create cash flow for our clients, to create some protection. Now, if those do get called away, it will create a loss in that stock, but we're hoping to use those as we go forward. Now, the tech stocks, things like Nvidia, Apple, AMD, we're going to give those a little bit of room to run because we really think out of everything out there, those stocks are going to run up the fastest once this is all over.
So what about some of the new positions you've put on that maybe won't run up that much, but you think you can get enough in the calls and the dividends to start to make up for some of the losses these portfolios have?
Oh, certainly. So things like Walmart, Gilead, Visa, positions like that we've all put on recently. They've all held together, in some cases gone up, like Walmart.
Wasn't there one where you got an 8% on, you got 8% on the call and a 2.5% on the dividend? It was like a 1 month call.
Oh, those are that was AMD that we wrote that on.
Mm-hmm.
So that's pretty cool.
10% on the premium.
1 month they gave you 10%, whether the stock went up or down or not. Did AMD have a dividend?
No, AMD doesn't.
No dividend. But there's 10% for just 1 month. Imagine if we did that 3 times during the year. That's 30% piling into the portfolio to help make up for those losses that we've all experienced.
And that's really what we're aiming at doing is creating that cash flow, getting this premium that really has expanded during this time of volatility to kind of bring some money into the account.
So there's some control that we have. Yeah. So John, I want you to talk a little bit about our what we call our double income strategy, our Mapato portfolios, and how it's done compared to the last big drop.
Okay, so you heard Marcus here. Now he's talking some market talk about these premiums. There's 2 components here. We call it a double dividend or 2 streams of income. We have a stream from dividends. You all know what those are. They come in. Plus we have an added stream from this covered call action, we call it. So we have 2 streams of cash flow coming into the portfolio, which tends to level out and hold up the value of the overall portfolio. And that's what makes this strategy absolutely unique. Most portfolios simply are diversified and then they cross their fingers and hang on. Back to the control, because of the structure of what we do, we have control over the volatility by these 2 income streams.
Absolutely.
Now, did you want to show them your
Sure.
chart?
Here's an example. You know, Don talked about 1987, talked about 1994 when we had some big interest rate fluctuations, 2000, 2008, and now this. Just a little illustration. I kind of just drew it out freehand, so it's not perfect, but let me show you.
And I better get up because he needs my chair to do this, so I'll hold it. Okay,
This works.
So what we have here is the portfolio, the core portfolio. I've used $100,000 simply to show how Naples Money Managers doesn't fluctuate like the Dow or the S&P in these big market drawdowns because of this two income stream, this double income stream. Back to 2008, you can see that the S&P and the Dow is blue, the S&P is red, the green represents our portfolio. So when the market dropped 40%, we were down half of that. That means our structure controls the value of your portfolio. No structure like we have, you don't get that control. And that's what we have. And the most important thing here is this theoretical $100,000 drops to 82, but here's the very crucial thing to understand. You see how the green comes back so much faster? Because of the structure, it comes back so much faster, and it takes 1, 2, 3, 4, 5, 5.5 years for the Dow and the S&P to catch back up. And that's crucial to understand.
and the Dow didn't even catch back up.
And the Dow has yet to catch up. So double income offers this type of structure.
That's great. Okay, you like that homemade chart? We thought it was pretty cool. But really what we're talking about is building up, piling up pennies. We call ourselves rock pounders. We get a little bit here, a little bit there, a little bit here. That provides the cash flow that our clients need to live their lives, yet it also reduces the risk of the portfolio. We said this last time. If you lose 40% of your portfolio permanently and you're taking out income, you will never catch up. It's as simple as that. Our goal is to take control over that. And one of the things we can do, and Marcus touched on it a little bit, is sometimes you actually want to bank your losses. Dennis, why don't you talk about that?
Well, banking losses is important during this period because we're looking for something to do that would bring you some advantage down the road, for one. And that is taking a loss. We all hate to take losses, but we can take a loss in such a way that it doesn't really impact your portfolio. For instance, take a loss in AT&T and turn around and buy Verizon, as a for instance, might be something to take a look at. You hate to do it, but racking up some losses is not a bad idea right now to use against future gains. You can carry the losses forward, so they can be useful, and you might as well take advantage of them while you can. But our plan is a one-year plan. We're looking to put together enough premium to cover the losses over the next, before the end of the year. And we think we can do it. The premiums on the options are good. We're continuing to sell the options against the stock. And I think assuming the market stops going down now, that we can do that by the end of the year.
So that premium, Dennis, is one of those two income streams.
The
right?
premium is one of those two income streams. Thank you, John. That's right. So I've got a little personal indicator I'm working on. I call it the panic index or the toilet paper index. I was at the grocery store yesterday, and everybody coming out of the grocery store had a big bundle of toilet paper under their arm. I think when we stop seeing that, we'll be saying, okay, sanity is coming back to the world, and they will quit throwing their stocks at the market and quit buying toilet paper.
So there's a couple of good points there. There's a saying that's in markets like this, stocks return to their rightful owners. And there's a lot of people out there who probably should never have owned stocks. And those who have, like most of our clients, really have been around a long time. Not all of them, because Marcus has got some younger folks. And it's really scary for them because they've never seen this before. But stocks always go up. You do just have to live long enough. It's also important to think that right now is the time to test the waters a little bit. We've been adding a little bit as we've gone along the last few weeks. Notice Marcus talked about that. We talked about that last week. If you can put money into your IRA right now, or your SEP IRA, or your 529 plan, now's the time to do it. I'm not talking about gazillions of dollars here. Just put in some. And on the other hand, when we talk about losses, This is a real important part of what you do, taking these losses. However, most people take the loss and they never go back in. That's not what we're saying. We're saying utilize the loss. Find a way to put your money back in immediately that will get you that upside, while at the same time capturing loss for tax purposes only. I think that was really important to talk about.
Absolutely.
So, as we mentioned before, we've been through this before. Actually, I'm really excited about our year-end plan. Super, super excited. We are going to make back, if that market doesn't go down any further,
Well, you
we're
know,
gonna get it all back.
That's a great point, and if you look at these markets back 40 years, and you look at the following calendar year, after a big drop, everyone is positive.
Right. But you need to be in the market.
You have to be in.
You gotta be in, that's right.
So I guess in closing, and anybody else have any closing thoughts
Nope.
here? You know, we're pearls of wisdom, as my mother used to call them. No pearls. I'm gonna ask everyone to do something again. Last week I said, go home, take a look at what you're spending, look at your portfolios, see how you, can you cut back a little bit? Maybe you don't even need to, but you can. And I'm guessing everybody was pretty much okay. Now I'm going to ask you to do something different. I'm going to ask you to do a little something for the economy. I want you to think about your hairdresser, your nail tech, your trainer, your favorite waiter, and maybe you can still help them a little bit too. Drop off a check in their name. If you're not going to your hairdressers and you normally go, just send her the money. I think this will really help our economy. It's the kind of things, it's the right thing to do. We were trying to do the right things here as well. And by the way, we are here. We're still a team. We're not going anywhere. We don't want you to worry. And we're gonna try and do this every week. May not be all four of us, but we're gonna be here in front of you.
Absolutely.
Have a good week. Get that market up. I'm not wearing red until it goes up. Take care.
Thank you, everyone.
Bye.